Welcome back to Investing Talk Podcast.
Good to be here.
Today, we're peeling back the layers on a sector that's seen a lot of action lately, uranium.
Definitely getting attention.
Specifically, we're looking at the Global X Uranium ETF. The ticker is URA.
Right. The big one in this space. Pretty substantial assets, around $3.4 billion?
Or about $3.43 billion, yes. It holds companies in uranium mining, nuclear components, globally.
A key player for sector exposure.
Exactly. And we're digging into this because one of you, our listeners, sent us some material and wanted us to unpack it, understand URA's performance, the industry drivers, and crucially, the risks.
So our mission is to sort through that material, pull out the key takeaways for you.
That's the plan. And hey, before we jump in, if you find these deep dives useful, please do subscribe, like the video, leave a comment, let us know what you think.
It helps others find the discussion.
It really does. And if you feel like supporting the work that goes into these, maybe consider buying us a coffee. The link's usually below. It genuinely helps us keep doing this.
Okay. So, URA. Let's start basic. What is it exactly? Are we buying, like, physical uranium?
Good question. No, it's an ETF, an exchange-traded fund. So it's not an operating company, doesn't mine anything itself.
Right. It holds shares of other companies. Its performance just reflects how those underlying companies are doing.
So you're getting exposure to businesses in the uranium game, mining, production of nuclear components, that sort of thing.
Correct. It holds a basket of stocks, businesses involved in the whole cycle globally.
A basket. How many stocks are we talking? What's the focus?
It tracks a market cap weighted index. Right now, it's about 52 different stocks.
Yeah.
So you get companies from various regions, different parts of the nuclear fuel chain.
Mostly miners, though, you'd say.
Primarily, yes. Strong emphasis on the mining and production side globally.
Okay. And that structure, holding stocks, means that typical company metrics, like revenue, earnings per share, PE ratio for URA itself, those don't really apply.
Exactly. Those metrics belong to the individual companies inside the ETF. For URA itself, you look at ETF-specific things.
Like what should an investor focus on for the fund?
The expense ratio is key. How much it costs to own. For URA, that's 0.69%.
Okay, 0.69%. Noted.
And it does pay a dividend. Comes from the dividends paid by the companies it holds. The trailing 12-month payout was a stuttle and 77 cents per share.
Which gives it a yield of?
Around 2.12% currently. So cost and income, those are the direct fund metrics.
Got it. Expense ratio, dividend yield. Now, performance. This seems to be where URA has really been making noise.
It certainly has. The price action recently has been quite strong, very strong.
Tell me about it. What are the numbers showing?
Well, look at the period from May 20th to June 10th, just this past year, 2025. URA surged over 30%.
30%. In what, 3 weeks?
Just about. It went from around $28 up to over $36, $36.33 to be exact.
Wow. And where is it trading now?
Right near those highs. It's been bouncing around the $35 to $36, maybe a bit higher range recently, multi-year highs.
Okay, that's a powerful short-term move. What about the very immediate run-up, say leading into mid-June?
It's also strong. In the 2 weeks just before June 13th, it was up almost 13%.
13% in 2 weeks.
And it had 8 positive trading days out of 10 in that stretch. Closed higher 3 days straight, ending June 13th, shows real momentum.
That's impressive short-term strength. But is it just a flash in the pan or part of something bigger? How do the longer-term numbers look?
The longer view suggests it's more sustained. If you look at the annualized returns as of, say, March 31st, 2025.
Okay.
The 1-year return was plus 28.0%.
Right.
3-year annualized plus 29.1%. Even 5 years back, it was plus 7.1% annualized. Another source mentioned plus 20.88% specifically over the last 12 months.
Those 3-year numbers, nearly 30% per year, that really stands out. How does that compare to, say, other commodities or the broader market?
It's significantly outperformed.
Yeah.
Over that same 3-year time frame, broader natural resource indexes, up maybe 4.9% annually.
Big difference.
Huge. And global stocks, like the MSCI All-Country World Index, up around 13.4% annualized. So URA has shown really strong relative performance.
So strong absolute returns and beating the benchmarks. Okay, let's look under the hood again. That basket of 52 stocks. Who are the big players driving this?
Well, given its market cap weighted, the biggest companies have the most impact. Cameco is the standout.
How big?
It makes up roughly a quarter of the entire ETF's assets, around 25% weight.
Wow, 25% in one stock. That's significant.
It is. Another major holding is the Spot Physical Uranium Trust. That's about 9%. So between those two, you're talking well over a third of the fund.
That Cameco concentration, though, a quarter of the fund, that feels like a risk factor investors need to know about, right?
Absolutely. It's definitely a concentration risk. While URA gives you sector diversification, any major news impacting Cameco specifically is going to move URA significantly, more so than news about the smaller holdings.
Makes sense. Okay, let's talk valuation again. We said URA itself doesn't have a PE, but can we gauge the valuation of the sector it holds?
We can look at the weighted average PE of the companies in the portfolio. That comes out to roughly 20.46.
20.46. How does that compare?
It's important context here that uranium miners often trade at higher forward PE multiples than, say, big diversified miners like BHP or Rio Tinto.
Why is that?
It usually reflects market expectations. The market seems to be pricing in significant future growth potential for uranium demand, paying a premium for that expected growth.
And does that apply to other metrics like price to book?
Generally, yes. You often see higher price-to-book ratios, too, for the same reason. It's that growth premium baked in.
Okay. And the dividend yield, you said about 2.12%. Is that typical for these mining companies?
It's generally modest. Sources often put the range between maybe 0% and 2%. Uranium miners, especially if they're ramping up production or exploring, tend to reinvest their earnings.
Right, putting money back into the ground or facilities rather than paying out big dividends.
Exactly. So the yield URA pays is just the sum of what its underlying holdings distribute.
Okay, that paints a clearer picture of the fund and its holdings. Now let's get to the why. What are the big forces, the tailwinds, driving all this interest and performance in uranium right now?
This is really the core of the investment thesis. There are a few key drivers converging.
Lay them out for us.
First, and maybe most importantly, there's a renewed global interest in nuclear power. A big shift.
Why the shift?
It's increasingly seen as a critical tool for clean energy. For hitting decarbonization targets, fighting climate change, it provides baseload power without carbon emissions.
So the whole green energy transition is actually helping nuclear?
Paradoxically, yes, for many governments and planners. Second big factor, supply constraints.
The supply side.
Right. The uranium market went through a long downturn after Fukushima. There was massive underinvestment in new mines. Exploration basically dried up for a while.
So now demand might be picking up, but the supply isn't there.
That's the dynamic. Existing mines are aging, and new projects take a very long time and a lot of capital to bring online. So you have this potential squeeze.
Increased demand meets tight supply. Classic commodity story.
Pretty much. And third, you have government policy actively supporting this now. We're seeing countries in Asia, Europe, North America talking seriously about extending the life of existing nuclear plants, restarting ones that were shut down, and importantly, planning and starting to build new reactors.
So it's not just talk, there's actual policy momentum.
It appears so. These plans require a long-term, secure supply of uranium.
Okay, so URA essentially offers investors a way to tap into this convergence, clean energy needs, supply issues, policy support.
That's the idea. It provides liquid access to this specific theme. It's seen as a leader in this thematic ETF space.
Are there other factors at play, maybe broader economic ones?
Some sources point to the macroeconomic picture potentially being supportive too. The idea is we might be entering or are in an environment of accelerating growth and maybe somewhat higher inflation, sometimes called Quad 2.
And that's good for commodities.
Historically, yes.
Yeah.
That kind of environment tends to benefit commodity prices, potentially including uranium.
Interesting. What's the overall vibe from analysts looking at this?
Sentiment seems quite positive, actually. You hear phrases like, nuclear's rebound has legs, suggesting a belief that these trends aren't short-term blips, but have staying power.
Powerful drivers. But investing, especially in commodities, is never risk-free. What are the big potential pitfalls here with URA?
Volatility is the first thing that comes to mind. It's inherent in this sector.
More volatile than the general market.
Yes. The beta is cited as 1.05, meaning it tends to move a bit more dramatically than the overall market. Big swings up are possible, as we've seen.
But big swings down, too.
Exactly. It comes with the territory. High highs, potentially low lows.
Okay, volatility acknowledged.
Yeah.
What are the specific risks that could trigger those downturns?
Two main ones. First, commodity price risk.
Yeah.
Straight up. The price of uranium itself.
If the spot price tanks.
It hits the miner's profitability directly, and URA's value follows. It's fundamental. Second, regulatory and political risk. Huge factor. Government policy is everything for nuclear. A shift in public opinion, a change in government stance after an election, new environmental rules for mining, concerns about safety. Any of that can drastically change the outlook.
Or even things like trade disputes, tariffs, sanctions.
Absolutely. If major producing countries face sanctions, or if importing countries impose tariffs, that could scramble the whole supply picture overnight. It's a global market with geopolitical dimensions.
So investors need to watch commodity prices and global politics closely. Anything else? Any shorter-term flags, maybe?
One technical indicator mentioned in the materials is trading volume. Recently, URA's price has been rising, but trading volume has reportedly been declining.
What might that signal?
For some traders, that can be a warning sign. It might suggest that the conviction behind the rally is weakening, or that some investors are starting to take profits. Not a guarantee of anything, but something technical analysts watch.
Okay, a potential short-term caution noted. Let's talk about sentiment more broadly. How are people feeling about nuclear and uranium now? And how does URA stack up against competitors?
Overall, market sentiment seems very positive, quite bullish, actually. News flow highlights nuclear's role in energy solutions. You're also seeing more institutional investors getting involved, lending credibility.
What about individual investors? Social media chatter.
Highly bullish there, too. Platforms like X, Reddit, lots of discussion about surging demand, even talk of a uranium squeeze.
A squeeze, like a short squeeze.
That kind of narrative reflecting retail enthusiasm. Though, to be fair, these discussions usually also mention the high volatility. There are also unverified rumors sometimes about big new contracts. Need to take those with a grain of salt until officially confirmed.
So general optimism, but maybe some hype too, alongside the volatility warnings. How does URA compare if someone wants this exposure? Are there alternatives?
There are. URA is the largest by asset, so it's very liquid. Its focus is global miners and producers.
Okay. Who else is in the ring?
You have the Sprott Uranium Miners ETF, URNM. Also focus on miners.
How's it different?
Similar goal, but different weighting. URNM tends to have less in Cameco compared to URA, but more in others, like, say, Kazatomprom or the Sprott Physical Uranium Trust itself. Different concentrations.
Okay, so similar theme, different portfolio construction. Anyone else?
There's the Vanik Uranium and Nuclear ETF, NLR. That one's broader.
Broader how?
NLR includes not just miners, but also nuclear utilities.
Yeah.
Companies involved in reactor design, other parts of the fuel cycle. It's less of a pure play on the miners themselves.
So URA, biggest miner-focused, big Cameco weight. URNM, also miners, different weights. NLR, wider net, includes utilities and other nuclear-related firms.
That's a good summary of the landscape. Different ways to play the theme depending on your focus and risk tolerance.
Okay, let's try to tie all this together. We've looked at URA structure, its really strong performance, the big drivers, the significant risks, the sentiment, the peers. Based on the material, what's the overall takeaway?
Well, the recent price strength seems driven by that mix of factors we discussed. The potentially helpful macro picture, growing institutional buy-in, that strong fundamental story around nuclear's comeback for energy security and decarbonization.
And just sheer momentum, technically.
And technical momentum, yes, all feeding into each other.
So given all that,
Yeah.
what's the bottom line from the sources reviewed? Buy, sell, hold.
The general lean in the material was positive. Recommendations tended towards hold or potentially BUY.
And the rationale behind that positive stance.
It points to the strong returns we've already seen, the increasing institutional validation of the nuclear theme, URA's leading position and asset growth, and the belief that it's well-positioned for this niche sector's anticipated long-term growth.
So optimism about the long game.
Yes, but always with very important caveats.
Let's hear them again. Crucial warnings.
Absolutely critical. Investors must understand the high volatility. It's not a smooth ride. And they need to be aware of the commodity price risk and the huge potential impact of regulatory or political shifts globally.
So it's really only suitable for certain investors.
Definitely. It's for those who can tolerate above-average risk, who understand the sector's dynamics, and are specifically looking for targeted exposure to this global expansion of nuclear power. Not for the faint of heart.
We've covered a lot of ground on the global ex-uranium ETF, from its basic structure and, frankly, impressive recent performance.
Right, through to the really powerful forces like decarbonization and energy security that seem to be driving this long-term optimism for nuclear and uranium.
Which is clearly reflected in URA's numbers. But then we also dug into the serious risks. The volatility is undeniable.
And the reliance on uranium prices, the regulatory unknowns, even those potential short-term technical signals like volume, maybe not keeping pace with price recently.
It really brings up a core tension, doesn't it? You have these compelling structural long-term arguments for growth.
Seemingly very strong tailwinds.
But they're set against these very real, potentially quite sudden short-term risks, and the inherent volatility of this specific commodity market. How does an investor weigh those two sides, balancing that long-term story against the short-term bumps, which could be quite severe?
That's the challenge, isn't it? A difficult balancing act for anyone considering this space, something to really think about.
Indeed. Well, thank you for walking through all that with us. We hope this deep dive into URA helps unpack the material you sent over and provides a clearer view of this very dynamic sector.
We enjoy tackling these topics you bring to us. Keep them coming.
Absolutely. Thanks for joining us.
Thank you for listening.
Until next time, keep exploring.